All right, guys, so today we're going to start talking about bank accounts. Bank accounts are a safe way for people to hold money for when they need it later and to collect some interest at the same time. You will receive interest from a banking institution as you are lending the institution your money. Now, this does differ from a bond, which is also you lending an institution or government your money. But the main difference is that bank accounts you can generally access at any time. Now, the bank can invest or lend out a portion of the money that they take in as deposits. They do not have to hold on to every single penny that they are given. Now, there are typically two main types of bank accounts. There are savings accounts and there are checking accounts. So what we want you to do is go ahead and in your presentation, drag and drop the circle over the account that you think is used to save your money for a later day. If you picked savings account, then of course you are correct. So what is a savings account? Well, savings accounts are used by people who would like to set aside money that you don't need right away. Most banks do expect you to maintain a minimum balance in a savings account. Most savings accounts that I've experienced in the past require a $5 minimum balance. Now, should you have a savings account? Well, there are pros and cons to everything. One pro is that you will receive interest on the money you deposit in this account. One con is that you're usually allowed limited withdrawals per month, otherwise you do end up paying a fee. Now, there used to be a federal law that limited the number of transactions you can make from your savings account each month, but that law has been overturned, so now any limits that are placed on withdrawals are determined by the bank themselves. The other main type of bank account is a checking account. Checking accounts are used to manage your everyday banking. You can deposit, you can withdraw money every single day, mostly multiple times a day. A checking account is used to deposit your earnings, pay bills, buy regular goods and services. As it is an account designed for daily use, you should not expect to get much, if any, interest for the funds in the account. Now, there are many reasons to have a checking account. One is that you can have direct deposit. So one good thing about direct deposit is the money is deposited into your account without you having to handle a physical check. You don't have to make a trip to the bank. You don't or scan the check and put it on your app. It's just done for you. Another benefit is that some banks have what is called early direct deposit, which means let's say you're scheduled to get paid on Friday, they might deposit your check on Thursday or Wednesday. It's not a lot earlier, but it is a little earlier. Now, also these funds are already in your account. They don't have to clear another bank because they have been transferred directly from another bank directly into your bank account. So that means you don't have to wait for a check to clear, so you can automatically take the money. Now, another thing you can do is you can write checks on the account. Most people don't write checks very often anymore. It's very uncommon to see anyone with a checkbook writing a check at the to checkout line. Most people are going to use a debit card, which does something very similar. It's just done more quickly. Nowadays, if you are going to write a check at, say, Walmart, they will often take the check, scan it through their system, and it will be done as an electronic funds transfer instead of a check that goes through later. You can also usually expect lower withdrawal fees on a checking account. You can usually withdraw money from an ATM. Now, most banks have a maximum amount of money you can withdraw from a bank at any given day. It is usually more if you go inside than if you do it through the ATM. You can also use debit cards at point of sale. That's when you go in through the cashier. And if they have a major credit card company logo on them, you can also use your checking account as a credit card. Now, of course, it still takes the money out of your account as it would if you were using it as a debit card, but you can use it at places where debit cards are not accepted, but credit cards are. So now we're going to take some time to practice comparing the fee structures of different basic bank accounts so that you can decide what will meet your needs. Because after this presentation, you are going to do some research yourself. So while you can open both a savings and a checking account at your local financial institution, how you use each will determine if you avoid being wasteful with your money. One thing I would like to add here is that many banks that have you open a checking account for an actual bank often prefer you to have a savings account as well. So just keep that in mind. That might be a stipulation. So let's look at these two banking fees. They have a savings account that has a $0 monthly fee, and every transaction that you perform is going to cost you $5. And then they have two checking account options. The checking account option A has a monthly fee of $6.95 for up to 12 transactions and $1.25 for each additional transaction. Option B has a monthly fee of $16.95, but you get unlimited transactions. So let's look at these different accounts and see in what situations they would benefit us. So question number 1 here says, if you have a savings account and make 5 withdrawals during the month, how much will you pay for all those transactions? Now, 5 times 5, so $5 per 5 transactions, that's $25 for the month. Now, if you're looking at option A on your checking account, you want to see how much it would cost for those same 5 withdrawals. Well, 5 is less than 12, so therefore you would pay $6.95 per month and no additional fees. So if this was my regular usage, of course, it looks like checking account A is going to be my better option because $6.95 is significantly less than $25. However, if I do not regularly have more than one transaction in a month, it would be better to hold my money in the savings account. Option B of the checking accounts would be best if you need more than 20 transactions per month because the first 12 are covered by the $6.95 fee. Since option B is $10 more per month, I divided the $10 by $1.25, which is the fee per additional transaction in option A, to get 8. 12 transactions plus 8 more transactions is 20. So once you have 21 transactions, option B is significantly better. And you would want that if you are regularly using more than 20 transactions. If you are regularly using 10 to 15, option A is still going to be less expensive. Take a moment and pause here and make sure you go ahead and copy these into your presentation. Now, the last thing I would like to talk about is payment services. And as you can tell, this slide was clearly added to this presentation later because now we have several different payment services that operate very similarly to banks, as they offer debit cards with routing numbers. They often can accept direct deposit, and the card can be used at point of sale terminals. This is going to be your Cash Apps, your PayPals, your Venmos, any other prepaid debit or credit card. One disadvantage is they will not have their own ATMs and they will charge fees for ATM usage. But one advantage is that they don't usually do any kind of major credit check and anyone with the correct documentation can get one. as long as you're old enough or have parental consent. All right, so what do I want you to do with that information? Well, one thing I would like you to do is an account research project. I want you to choose 2 banks and research their checking and savings account options. You need to include the name of the bank, what their checking and savings account options are, and some banks have interest-bearing checking, some do not, some have both, and the details about those accounts. Is there a minimum or an annual fee? What are the interest rates? Are there minimum deposits or balances needed? Do they offer any benefits for direct deposit? Do they offer overdraft protection, etc.? Does the bank have other types of accounts to help with savings, such as certificates of deposit? Can you open an investment account? Once you have done one slide for each bank, you're going to end up choosing one bank and explain why you would choose that bank. On each slide, you must include a link to the bank that you're talking about. So let me go ahead and show you an example. So let's say we have Bank 1. And the first thing I want you to do is change Bank 1 to the bank that you're using. So let's say, for example, you are researching Ally Bank. You would change Bank 1 to Ally Bank, and then you're going to put www.ally.com as the bank's website. All right, so let me go ahead and show you that example. All right, so this is the ally.com banking website. So the first thing they are advertising is that they have a 4% annual percentage yield on all their balance tiers. So that means you could potentially have 4% interest no matter how much you're saving. So let's look at their various options. They have checking and savings accounts. You can see it says, yes, you can invest. They have loans. Most banks do. They have different things here that you can do. You can purchase a home, refinance. They have life insurance. They offer spending accounts. That's going to be your checking. They have 3 different kinds of certificates of deposit, and you can do a money market account. And you can do self-directed trading or get some advice on that as well. All right, so let's look at their checking accounts. So we can see that they have early direct deposit, they have no overdraft fees, they have no monthly maintenance fees. You can access 75,000 no-fee ATMs. Now, Ally does not have physical locations, so they don't accept cash. So that does make things a little more difficult for them. But if you can't find a no-fee ATM, every month, they'll reimburse up to $10 of other banks' ATM fees. There's a double line of defense for overdraft transfer service and the cover draft. They don't charge overdraft fees. And then you can plan and budget your money with them as well. Okay, so that's one thing they have. You can have them calculate the annual percentage yield. Let's say your daily balance is $1,000, okay? So you can see that you're going to earn $1 per month. But if you look, most banks this is for their checking accounts, their APRs are, according to Ally's Bank, and of course you can check this, Ally and Capital One have the highest interest rates for checking accounts, and there's no minimum deposit. So that's one thing to keep in mind. No minimum deposit. They have the app, they have the card, and then they have right here, you have a frequently asked questions. So let's see what else they have. All right, so here is their information about their savings accounts. It does say they have a 4% annual percentage yield. That's a fairly high APR. Sorry, it's a fairly high APR. You again can organize your money using the savings buckets so that you can keep track of where you're going to keep your money. In the old days, we just tuck it into envelopes, and keep it under our mattresses. But now you can do that with the bank and the information they have. You can set up recurring transfers so that you can take money from your savings directly into your checking account. You can also see right here, they offer roundup, so you can round up the transaction to the nearest dollar in your checking account and they will move it to your savings. I haven't seen that before. And you can see this on their How We Compare. This is what's currently available as far as they know, or as far as they're telling you, is that they have a 4% annual percentage yield on their savings account. According to this, Bank of America, Chase, and Wells Fargo all have 0.01, but you would want to check that yourself. Don't always just trust what another bank tells you. Okay, remember, the bank is out to make money. Make sure you keep that in mind. Now, this bank does not have any monthly maintenance fees. There's no overdraft fees. There's no ACH transfer fees. That means just transferring money between different bank accounts. You can accept wire transfers for free, and they will send you a cashier's check or an official check. And there's no excessive transaction fees, which means you can have as many transactions per month as you would like. Now, the fees they do have is an expedited delivery, say, of your official check and or outgoing domestic wires. So if you're going to wire money with inside the country, it's going to cost you $20. All right. And then if you want, you can see there's some frequently asked questions. You can check them out. Here's a good question is, what's the difference between a savings account and a money market account? Basically, money market account is a savings account that offers a debit account and card and check. So it's kind of a bit in between. You have 10 limited withdrawals and transfers per statement cycle from your savings account. If you go over the limit, there's no fee, but keep in mind they will close your account if you exceed it on more than an occasional basis. That means probably if you do it more than 2 or 3 times, you're going to get in trouble. Okay, and you can do everything online. You can do it by phone. You can do it by check request. So that is a bank, Standard Bank. This is an online bank. If you need to, for your second bank, if you want to do Ally, you can. You could say local banks. And they give you some options of banks that are nearby. So you can go with, the Bank of San Antonio if you want to see what it is. You can look at Vantage Bank. There's credit unions. There's Generations Federal Credit Union, which is a big one here in town. RBFCU. Of course, there's Bank of America, Chase, Capital One, lots of physical banks. Now, I do also want you to make a slide that compares 2 different payment services that offer prepaid debit or savings accounts. Find out if they offer interest, what are some of the advantages to using them over a bank, and include links to their websites. So one example I know that many of you are already familiar with is Cash App. So Cash App is a payment service. You can send people money using the app. And you have to link it. You often have to link it to a bank account in order to add money to it that way. They have some discounts. You can bank the way you want, but notice right here, there's a star. It says Cash App is a financial services platform, not a bank. Banking services are provided by their banking partners. Prepaid debit cards are issued by Sutton Bank. Okay. So let's just click Learn More on the banking. Okay. It looks like you can get your paycheck up to early. They have the 2-day direct deposit. And ATM fees are covered when you direct deposit $300 or more in a month. So like Ally, they can go ahead, they'll give you some ATM fees back, but they have a stipulation of you have to have direct deposit in order for them to do that. Now, another thing you can do with Cash App is open a savings account. They do have no minimum balance or fees, so that's good. Like I said, most banks do have a $5 minimum balance. Now, they do have here where it says up to 4.5% interest. Now, that sounds amazing, and it is. But one thing you do need to keep in mind is they're using the word up to. So let's look here. It's free to use, no problem. I know it says no minimum balance, but you do have to at least have $1 to start. Your savings balance is FDIC insured through their bank, so that's pretty cool. You get unlimited transfers between your cash and savings balances, so that's also kind of neat. You can also set goals. Now, if you just get the Cash App card, you can have a savings account with a 1.5% interest rate on the savings. And that's pretty good. If you looked at the other banks that Ally was comparing them to, that's more than some of those banks. However, they said up to 4.5%, which is better than Ally. But they again have a stipulation. You must have direct deposit of at least $300 in paychecks in a month, and it'll increase your interest to savings. Now, that has to mean direct deposit into the savings account. Okay, you got to make sure you're doing that. That in and of itself is not that difficult if you are working full time, but you do need to keep track of that. Make sure you're paying attention. 4.5% though, that's an excellent interest rate. If you can get that, I would say there's no reason you shouldn't do that. Okay, so then you're going to look up a different payment services one to do your research on as well. Again, you can use the Cash App, but you do have to do 2 of them. Now, again, the last slide, I, of course, would want you to say which bank or payment service would you choose and why of the ones that you researched. So just give me what you chose and don't forget to explain why. Do not forget the sources. That will be an incredibly important part. I am going to have, did you provide the banking websites? Did you provide the bank name? Did you give me some information about checking and savings? Did you answer, do they have other savings account products? Everything is going to be detailed in the rubric when you see it soon. So that's all I have for you. Make sure you have that first slideshow filled out, and then you have this one is ready for you to use. You can make it prettier. I just have it as black and white right now. I'm not going to be upset if you don't change it, but if you want to make it aesthetically pleasing to yourself, feel free. You may transfer this into Canva if you would like, or you can just use my template that I made for you. If you have any questions, send a private message on Google Classroom or ask Miss Miller, and she can reach out to me with any questions. Talk to you later. Bye.